Good afternoon, everyone. Welcome to today's webinar. My name is Abdullah Shaheen. I am the CEO of KiwiFX Innovations. Today's session is designed to give you a clear and practical understanding of how systematic algorithmic tradings work and to help you determine whether this approach is suitable for you. We'll go through the topics on the agenda today, but we won't dive into technical trading details. The idea is to focus on the main concepts and how this approach actually works. So whether you're looking for passive income or you're a trader looking to diversify, which should be relevant for you. Let me pause this video so we can focus on the screen. It's going to be a short 10-minute presentation. You can type any question you have during the presentation, and we'll have a detailed Q&A session towards the end. What is trading? Trading is the buying and selling of financial instruments. The goal is to benefit from price movements over time. For example, when you buy gold at 4,000 and you plan to sell it again at 4,400. Markets include currencies, indices, commodities, and equities. Trading offers an opportunity, but always involves risk. Like, for example, when you bought the gold at 4,000, the price went down, it didn't go up. Trading decisions can be made manually or by predefined systems or algorithms. By algorithms, we simply mean predefined rule-based systems that execute decisions automatically, not manually. And finally, long-term results depend on discipline, execution, and risk management. While trading sounds simple in theory, achieving consistent results over time is where most people struggle. So those are the most common problems faced by traders and how KiwiFX solve those problems. Let's start with decision making. When traders are influenced by news, opinions, or pressure, consistency breaks down. Algorithmic systems remove that by following predefined rules exactly without second guessing. Secondly, emotions play a major role in trading. Fear, greed, or hesitation often interfere with execution, while algorithms operate without emotion, hesitation, or fatigue. The third problem is risk control. Under pressure, risk is often mismanaged by humans. So in our approach, risk management is built directly into the system and enforced automatically. And finally, availability is a real limitation. Markets move all the time, but people cannot be present 24/7. Systems, on the other hand, operate continuously without interruption. For investors seeking passive market exposure, the challenges are different but equally important. Those are the most common issues faced by retail investors. First, access is a real issue. Algorithmic trading is typically reserved for institutions, so our role is to make institutional style algorithms accessible to individual investors. Secondly, capital requirements often create barriers. Professional execution usually require large amount of capital, while our approach provides structured market exposure without the need for large capital commitment. The third challenge is execution itself. Most retail investors don't have access to professional trading tools or infrastructure, which is why no trading knowledge is required here. Execution is handled entirely by our system. And finally, transparency matters. Many passive investment options offer limited visibility, whereas our performance is tracked at broker level and verified independently through platforms such as FX Blue and MyFXBook. So whether someone is an active trader or an investor seeking passive exposure, the underlying need is the same: a structured, rule-based way to participate in the market. This brings us to who KiwiFX Innovations is and how we approach the markets. We are a systematic, algorithmic-driven trading firm, which means decisions are made on data and predefined logic rather than opinions or predictions. We don't attempt to forecast markets or react to news. Execution is rule-based, automated, and designed to remove emotions from the decision-making process. More importantly, we trade our own capital using the same strategies and under the same conditions as our investors, ensuring alignment of risk and incentives. Professional execution and risk management are core to how these strategies are designed and operated. We'll go into more details on risk management in the next slides. Building on who we are and how we approach the markets, this is what we do in practice. We develop algorithmic trading strategies that are rule-based with predefined logic and objective entry and exit points. Each strategy is then backtested and optimized on historical data. Once validated, and after testing the strategies on demo account, they are traded on our own account under real market conditions. Performance is then monitored continuously to ensure the strategies work as expected, and over time, the algorithms are periodically refined to ensure they remain aligned with changing market conditions. So what is copy trading? Copy trading is a broker-provided mechanism where one trading account mirrors another automatically. When a trade is executed on the main account, it is copied in real time into the connected investor account, with trade sizes adjusted proportionally to each account's capital. All execution is handled by the broker's infrastructure, and once the connection is in place, no manual action is required from the investor. This is where KiwiFX differ from most copy trading providers, which rely on individual manual trading. At KiwiFX, our algorithms are hosted on a dedicated VPS, using high-speed and stable infrastructure to support consistent execution. The system operates continuously without limitation tied to human availability, and risk management is applied both internally at the account level and externally at the VPS level. When a trade is executed on our own account, it is then copied proportionally into the investor account through the broker's copy trading system. Risk management is not something we add later. It is built directly into how our strategies are designed and operated from the very start. Each strategy runs within predefined exposure limits, ensuring risk remains controlled at all times. Position sizing is calculated automatically based on rules rather than confidence or emotions. Risk is also managed at a portfolio level, not just trade by trade, taking into account how different strategies and instruments interact with each other. In addition, drawdowns are monitored continuously, allowing risk parameters to be reviewed if market conditions change. The objective is not to eliminate risk, but to manage it in a systematic and a consistent way. Beyond how risk is managed within the strategies themselves, it is also important to understand how investors remain in control. At no point do funds leave the investor's account. All execution, reporting, and withdrawals remain under broker control. This structure ensures transparency, alignment, and full control for the investors. This means at any point, the investor can stop, can pause, can cancel the copy trading. They can add money, withdraw money from the account. They have full access on their own account. This approach is for busy professionals who want passive market exposure, traders looking to complement what they are already doing, and investors who value structure and discipline. This is not for short-term or quick return expectations. What investors should expect is a fully automated, long-term approach focused on consistency rather than on daily fireworks. Where drawdowns are part of the real markets, risk is kept moderate, and results come from discipline over time, not from short-term performance chasing. This is an example of live performance from our KiwiFX core strategy, shown to illustrate how the system behaves over time. Over this period, returns were built gradually with periods of growth and periods of drawdown, which is exactly what we expect in real markets. Over the last 10 months, cumulative performance was around 30%, with an average monthly return just under 3%. Of course, past performance does not guarantee future results, but it helps set realistic expectations around behavior, risk, and time horizon. Basically, this is called an equity curve. Those are the cumulative profits over time. You can see here drawdowns, those happened because of a major event in the market, like here when Trump declared tariffs for the first time, and here when Japan uh, appointed a new prime minister. Those events shocked the market, but our risk management kicked in, and we were able to recover and continuously move upward. So today we have walked through the challenges many manual traders faced, as well as the limitations investors encounter when seeking passive market exposure, and how algorithmic systems are designed to address those challenges. KiwiFX provides structured, automated market exposure through copy trading. If this approach resonates with you, the next steps are straightforward. You can review the live performance, take time to assess whether it fits your risk tolerance and financial goals, and if appropriate, explore setting it up through our partner broker. With that in mind, we are happy to answer any questions you may have. Thank you.